view, which will be presented by Byron, Clatterbuck, the CEO for SEACOM, and what he thinks should be happening in Africa. Thank you.
Thank you, Simon. Thank you, everyone. I think I have to stay in one place. Is that right? Are you being filmed? Okay. So everyone can hear me? Everyone can see me? Yeah? So my name is Byron Clatterbuck. I'm the CEO of SEACOM. So we've been in Africa about 10 years. I'll give a little bit of background on SEACOM. Yeah, I was listening to Sunil, and I felt really bad for the carriers. I was starting to think when I get my telecom bill this month for my fiber to the home, I'm going to pay twice as much. But I think the point about the ecosystem is quite important, and we'll discuss that as we go forward. But first, I thought, let me say thank you to SAFNOG for having me. I thought it would just be good to get a different perspective, to have someone who actually owns and operates cable system infrastructure in Africa and put that view forward as well. Because I don't disagree with a lot of Sunil's points, but let's go through my story, and then we'll kind of conclude that at the end, and I think we can have some questions to discuss. I think everyone here knows SEACOM. I'm going to say, raise your hand if you know SEACOM. You've heard of SEACOM? Okay, that's good, because we've been around 10 years. We just celebrated our 10th anniversary. And you may recall that in 2009, in July, when SEACOM went live, there was only one other subsea cable that landed in South Africa. It was called SAT-3. You might not have heard of that. It landed in 2002 and really didn't do much for the market. And I can imagine why. It was controlled by one carrier, and that carrier really didn't allow that capacity into the marketplace, unfortunately paid for by taxpayers' money. So SEACOM got a bunch of investors together, and we were set up, privately funded. Okay, so it was the first private cable into Africa, driven by a profit motive. Okay, no question about that. We're privately funded. So at that time, we were not a carrier. We were a cable project. Okay, and I think there's been a lot of talk about carriers and OTTs. I think they're both carriers. Right? We weren't a carrier. Certainly in 2009, when SEACOM went live, or actually we tried to get it landed and to be live, we were resisted by almost every carrier. We were unwelcome into the marketplace at that time. And I think the reason was that the same things that Sunil brought up, which are that people thought their revenue streams, the price they could charge per megabit for capacity, was under threat. But I think what we've seen since then is a massive change in the entire ecosystem, and I'll talk a little bit about that. So in 2012, we had the wax cable go live, and I think we all know the wax cable. We rely on that on the West Coast, and it kind of allowed SEACOM to expand what its offering was so that it wasn't a linear path cable, but it could provide resiliency on the West Coast. So if we had issues, which we did have sometimes, going across Egypt and through the Mediterranean. So we had protection on the West Coast. So we're a big investor in the wax cable system and continue to upgrade with that system. We then moved into enterprise, because I think the wholesale market under strain, hard to grow in the wholesale market, especially as more cables upgrade, more cables were landed. So we moved into enterprise directly ourselves. And then in the last few years, we've been acquiring some companies. And I'll bring up some of those acquisitions because they kind of play into the story. Sunil talked about also terrestrial investment in more assets within Africa, and I think the changing landscape. And you can see FiberCo, importantly, that was to get us across Southern Africa, which is very important, I think, as we go forward. So as I said, there's a couple of things that are unique to Africa. One is, we talked about the internet penetration, but it is largely on handsets, right? It is a mobile phone market today, largely. Very low penetration in what we would call traditional fixed line or fiber assets into the marketplace. But I think that's changing. But of course, there's a lot of other investments and developments that need to happen to make it easier to build fiber when you look across Africa, right? If you don't have roads and you don't have guardrails and you don't have highways and you don't have railways, it's quite difficult for a fiber constructor to build raw cable and lay it in the ground and make sure it's maintained. But I think what we've seen in Africa is that certainly the advent of the subsea cables really changed the ecosystem quite dramatically, okay? And I think we've seen the uptake more and more of mobile handsets, and now what you're seeing is quite a revolution in South Africa in particular, that fiber to the home, fiber to the business is becoming more ubiquitous, certainly in developed areas, and now it's going to become more ubiquitous in smaller towns and tier 2 towns around South Africa. I think we're already seeing that come. Certainly, I think the advent of subsea cables also brought in the cloud providers, and their investment into the marketplace. And I think that more and more as that infrastructure rolls out, not only in South Africa, but particularly Kenya and in Nigeria, you're seeing more regional connectivity, which really could also drive opportunities to invest terrestrially. But I think there's no question that, you know, that lower chart there as time goes by, being a carrier means it's carrying data, let's face it, right? We live in a digital world, whether we use social media applications or we use cloud-based computing on the cloud or storage or anything else, it's all bits and bytes, it's all data, and it needs to get carried around. And I think when we ask ourselves, who's carrying that? And I think that the players in that ecosystem now have changed dramatically. And some of the guys that we're talking about as the OTTs are now carrying most of the traffic. So if you're carrying most of the traffic, obviously you need superhighways. And of course, that does have an impact on people who make their money by selling, you know, toll roads. So I think when you look at the South African market, and I'll hone in a bit here because there's a little bit more information on the size of the market. It's around $2 billion just in internet and other data. Okay, that could be private data networks or just the public internet. And it's growing, okay? And I think, you know, it's going to continue to grow. But I think what you're also seeing, if you look at the lower left-hand corner, you're also seeing since the cables have come in and since bandwidth is more plentiful, you've seen a shift about who provides that to the end user, right? So obviously 20 years ago, it was only one company provided data connectivity to everybody in the country. And now we see a growing ecosystem of more and more ISPs, and the market share of the traditional players has gone down while these new entrants grow businesses and provide services, whether it's to a business or to a residential complex. So you see the ecosystem kind of growing and more companies taking market share away from the traditional PTT and telcos. And this happens in all markets, right? So when we step back and we look at, do these things benefit you as a consumer or you as a business? I think the answer is absolutely yes. More competition, right? More choice, better pricing, better service. I think we would all agree that those things are important in that ecosystem, right? And I think this revolution that's happened really has woken things up and caused a lot of opportunities as well as a lot of hardship. There's no question about it, right? Same thing happened with the railways, same thing happened with the whaling industry. There's a lot of industries you could look at and say that radical shift has hurt that traditional industry, but we probably wouldn't go back to it. So if we look today specifically at Africa and subsea infrastructure into Southern Africa, and I've only put 3 cables here that I'm going to talk about because there are only 3 cables that have more than a terabit of capacity capability. Okay, so that would be SEACOM on the East Coast. We were the first ones here. EZ came next, it connects up to Djibouti. And WAX on the West Coast. So when you look, and we talked about transatlantic, right? So this is 1.3 billion people, growing economies, right? Important part of the world, and you've got 3 links that connect it to the rest of the world, right? All of them, WAX is a consortium, traditional consortium. EZ is also a consortium. SEACOM is the only one that's kind of private, and I would almost say it's a little bit of a hybrid because when SEACOM was built back in 2007 to 2009, it was a shared build with Tata. The cable lands into India as well as into Egypt and then goes across Egypt into France. But really, it's only 3 cables, just so we're clear. And you can talk about the capacity today. SEACOM's lit at about 1.5 terabytes, and we're going to upgrade that capacity pretty soon. EZ, I believe, is at about 4 terabytes. WAX, I think, is maxed out with its express fiber into South Africa at about 6 terabytes. So it's a lot of capacity, but it's 1.3 billion people and it's growing. So what's kind of happening with the market dynamics, and particularly in South Africa? The upgrades continue, right? So the initial cost of the subsea cable is there, was hundreds of millions of dollars, and it's easy and cheaper to light more capacity, right? So when SEACOM does a light, we used to do a light at maybe 500 gig. We're now going to do a light at 1.5 terabytes just because it's cheaper and it makes sense from a capital deployment perspective to do it once under one project. So really the cost, the unit cost over time goes down, right? That's important. Most capacity is also used on the superhighways. So you see Kenya, Nigeria, and South Africa consuming most of the capacity on these 3 cables. the content and cloud providers are now building more and more data centers and other infrastructure into Africa, right? What does that do? That kind of changes where you need to go, right? So eyeballs now in Kenya might come to South Africa, Mozambique may come to South Africa, Uganda is going to go to Kenya, et cetera, or on the West Coast, right? So you see an increase in regional traffic, and we're already seeing that today where not everything has to go up to Europe. Our IP traffic has shifted dramatically where it was 90% going to Europe, it's now probably 60%. So that just means the region itself, Africa as a continent, becomes more important and content stays where it needs to be used and looked at. Prices, now, Sunil, those are some pretty high prices. I wish we could see $80 a megabit in 2020. We're already probably at about $3 in South Africa, a megabit. So when you talk about these new cables and the hundreds of millions of dollars getting built, all things being perfect, a carrier at $3 a meg is going to be pretty hard pressed to make a return on investment. And you can buy a 10 gig IRU for probably less than $1 million today in South Africa. Now, pricing in other markets is a bit higher. Pricing, obviously, at the retail end or consumer end is going to be higher than that. But that just gives you an indication if you are a big carrier and you're looking at making a big investment and you're seeing that kind of price point, right? It would make you pause and think, you know, do you want to make that investment? The other thing, and I just thought I'd show this as an example because, you know, in most other markets, you would have networks that go around a continent and you would have networks that go across the continent, right? So you would be creating multiple rings so that your network resiliency on East Coast and West Coast is much higher. But as we know, we've got 54 countries, and there's not much in the way of infrastructure that goes across Africa. So even if you look at South Africa, we just bought the company called Fiberco. That's pretty much a network we've put together with DFA and Fiberco, and there's some new plan stuff as well. But it creates a superhighway across South Africa that enables the East Coast to connect to the West Coast, which not only gives you the ability to drop in tier 2 towns, but it also says if I have a failure on the East or a failure on the West, I can route traffic in the other direction. Now, of course, latency is going to go up. Some applications may not be great, but it's better than being hard down, which I think we all remember the days when SEACOM was hard down, the internet was cut off, and it seemed like a catastrophe. So I think those days are kind of gone, but you still would say, 3 cable routes, is that enough? And particularly when you look at this, it's not that many routes across Africa. And those are some pretty remote locations, even across South Africa. So I'm just checking my time because I'm going to be well under, okay? But then we can have a little discussion. So I think when you look at what are the issues facing subsea cable infrastructure, and we're specifically focusing on that, it's certainly cloud demand is increasing. I mean, everybody here would say they can't get enough speed, you can't get enough throughput, you want to be able to do things faster, whether you're in the office, whether you're at home, right? The existing infrastructure is, as a result, really driven by those hyperscalers, the cloud players. We're upgrading more frequently, right? It's kind of an exponential line in how much capacity gets added. And I think that it's pretty clear that the cable systems that I showed there will probably reach their ultimate capacity within 3 years, okay? They're also getting older. SEACOM is already 10 years old. Easy is about 10 years old. WAX is a little less than that. But systems age, right? They're under the ocean, and technology changes, et cetera, et cetera. You've got to maintain them, and there's some pretty difficult places to maintain them. So, you know, the normal life of a subsea cable system is usually guaranteed at 25 years. Okay, so you're kind of starting to say, you're getting to middle age here on the existing infrastructure. As I said, there's only 3 routes. So while the capacity prices have come down and all of that, is that adequate resilience? I think if you looked at the Atlantic today, there are new cables being built across the Atlantic, and there are probably 18 linear routes between London and New York, right? Okay, now that's maybe overdone in terms of resiliency, but that's the kind of mesh networks that exist today, right? Is people want at least 5. If you can have 7, that's better, but 3 is kind of a minimum requirement, I would say. So the other point is that they take years to construct. So we've talked about some of the cable systems that have been announced, and a lot get announced, don't get me wrong. Only about 10% of what get announced get built, but Equiana and Simba seem to be making progress. I can only speak from the outside, but they're certainly making progress, but they're 2 years away at least, right? And with all the landings that were mentioned, they're probably more like 3 years away. because building a cable project is pretty complicated and takes a lot of time. And real construction hasn't even started. So you've got this time horizon, that massive capital investment that takes a very long time. And that's the next point. It's a huge capital investment. So Neil mentioned 300 million, maybe it's 500 million on the east with all those landings. That's a lot of money. But when you step back in the grand scheme of things, you know, Vodacom's published South African financials, they spent more than $1 billion in CapEx just last year. So what we're talking about, 2 new cable systems, isn't even what Vodacom spent in capital in 2018. So sounds big, but you know, what's big? So some of the different models, and I think this relates to really where we go from here, because I think we've all seen, the traditional model was the consortium model, okay? And you can imagine when you get lots of investors, you know, from ISPs that invested into WACs to mobile network operators to regional carriers to the traditional PTTs, they all have a say and they all get access to that capacity on some kind of investment unit, right? But what does it do? It creates a huge amounts of bureaucracy, right? And it's very slow and not very agile in what it wants to do. So upgrades take a long time. The choice of supplier is a big voting contest, et cetera, et cetera. But they have their benefits, that they de-risk the investment. There's no question about that, and that's why they've been around for so long. When it was a carrier's world, a carrier's club that all met in the sunny beaches and discussed a new cable, and they were going to be the only landing party to land that cable, and they just put in a small amount of money and could charge what they wanted in their marketplace. So I hear you what you said about Bangladesh as an example, but Bangladesh was charging about 100 times per meg what Singapore was charging in the marketplace. So go figure. So private. Now privates, you don't see too many of them, okay? SEACOM was kind of private. We were maybe a little bit of a hybrid. That means somebody's taken a big risk, investing hundreds of millions of dollars into a cable with the expectation that they're going to make a return on that investment. That's not an easy thing to do, I can tell you right now. That's why you don't see it so often. Generally speaking, it has to be on a unique route that's highly underserved, and you've got some investors who have some cojones, as we say. So, and the hybrid model, I think, is the new model. And if you look at the Equiano model or the Simba model, I think they would fit in that category, where you are sharing infrastructure at a fiber level. Okay, generally speaking, it's at a fiber level, which means you kind of can get that agility on your fiber. You can choose who to light it with, et cetera, but you share the overall subsea cable maintenance costs, landing station costs, repair costs, all of those things. So I think what you see more and more around the world is the hybrid model, right? Generally speaking, it can be carriers together with traditional carriers, I should say, with the new kind of carriers who invest together to build infrastructure, share cost in the infrastructure. But I think that key point at the end there, you know, generally speaking, if you have lots of traffic and you know it needs to get somewhere, you have a decision to make, which is you can either buy from someone else or you can build. And I think the business case is to say, hey, we've got traffic, whether you're a mobile network operator with 30 million subscribers, or you're a carrier with 100,000 homes and 50,000 businesses to connect, you need that data connectivity. So you're sitting there going, do I invest or do I wait and buy? And I think, the OTTs play that same game in their heads. Do I build or do I buy? I've got to get, terabytes of traffic between these data centers. How do I do it? Do I lease some capacity? Do I invest in IRUs or do I build fiber? And I think what we're seeing now is more and more they need that superhighway. They're building those fiber routes. So I don't know how our global network that got in there by mistake. This is not our global network. This is just talking about what is discussed, the potential new African subsea cable. So I'm taking it really high level here. I didn't have the detailed maps or the detailed landing plans, but the idea of Equiano is to build from kind of the European West Coast, if you will, down to the African West Coast, okay, with some branching units along the way. Simba, the grand plan, is a ring around Africa, okay? Now, the thing about them is that they're very high fiber counts, okay, which is kind of unique. Most cable systems is SEACOM cable, easy cable, you're talking 4 or 2 fiber pairs, right? WAX is 4, we're 2. That was the general established norm. You see a lot of 8 fiber pair systems. You don't see anything much beyond that until now, okay? Because once you build that infrastructure, adding in additional fibers is a very low incremental cost, okay? So what you're seeing here, people are talking about 12 or 16 fiber pairs, right? So the manufacturers have stepped up to put those in. Whether you actually ever use those fiber pairs remains to be seen. But it's always a good insurance policy, I would say, to have them. I've regretted it many years when building other cable systems where I didn't put in that extra fiber pair. The other thing is that these cables are largely open access, okay? So, you know, it is counterintuitive. I think if the OTTs want the cost of networks to go to zero, how do you get there? You encourage as many people to have fibers and capacity and try to fight to sell in the marketplace. That's how you get to zero. Right? But again, if you have your own traffic needs, then that open access is very important. You know, the reason SAT3 as an example is not, you know, is lit today at I think more than 800 gigs. It's not really used in the marketplace. We don't really count it on the maps because it's controlled by one landing party. It's not open access. It's open access if you want to pay, I should say it that way. And these are hybrid models, as I said. So they're going to be OTTs who need to shift traffic around from their hyper data centers, and those data centers in South Africa continue to grow, and it's carriers, right? So this is the new universe of OTT and carrier working together. And I think, you know, if you just solely want to look at subsea cable capacity and price per megabit, yeah, I agree with you. Wholesale is going to be a struggle. There's no question. I don't know if it's dead, but certainly wholesale growth, if you look around carriers around the world, is pretty much flat. Some places it's declining. If anywhere it's growing at a wholesale level, it's growing by 1 or 2%. But I think the shift is, how do you get to consumers? How do you get to businesses? And what value-added services can you layer on top of that as a data network service provider? So, in summary, there's a huge investment required. Right? As I mentioned, this is a drop in the ocean, literally a drop in the ocean. And if you built these cables for free and gave them away to every carrier in Africa, you probably wouldn't see the price of IP transit or the price that you pay at your home change one iota, because it's not going to have much of an impact, right? The investment and the costs are in the local networks, right? The access to your home, the access to your building, the metro rings, the equipment, the terrestrial resiliency that you have to put into the backbone. And that's where the investment's really coming. If you look, I haven't done the math, but if you look, you know, the amount of investment that's going to take place in Africa in the communication space, it's probably going to be billions every year, right? If I just said Vodacom spending $1 billion, I'm just going to guess even in South Africa, you're probably seeing $3 to $5 billion US in telecommunications, data center, wireless access, et cetera, infrastructure is going to be put in the market. And I think that's right. Right? So subsea cables are an important part of this, and they kind of kickstart it and drive it. But really, you need to focus on the services you provide and the resilience you provide locally, because actually traffic is going to stay more and more local. So I think that there's a fundamental question. We've got 3 routes. We know we need more, right? It's been more than 7 years since WAX went live, but you know, there was a lot of talk about a couple of cable systems, but none were happening. So the reality is the OTTs seem to be building them, and carriers are working with them. Do I think that's a good thing for Africa? Do I think that's a good thing for consumers and businesses in Africa? So, you know, is there the ability for that ecosystem to change and people to find a niche where they can make their profits? Yes, I believe that's true. Are the carriers in the traditional sense under threat and under pressure? Yeah, that's true as well. But I don't think we want to go back. So I think also the other thing is to note is I think there needs to be some effort in that cross Africa rings. So, you know, if you see investment, and people have talked about it, could you get from Brazzaville to Mombasa? And how many years do you think that's going to take? And I think it's going to take some years. So I'm going to wrap it up on that. The good news is I'm well under time. And now we're going to have some questions, I believe. Thank you.
Thank you, Byron. Interesting perspective. So number days for the carriers vis-a-vis opportunities. Questions? And when you come with questions, please indicate which presenter your question is going to.
Yes, my name is Prince Khatebe from OpenSafe. I just needed to make a comment with respect to maybe the agility of consortium models as opposed to maybe a hard. I think that I do not agree totally that the consortiums are less agile than maybe either hybrid or privately owned cables. I've had an experience where, for instance, we had two upgrades taking place within the WEX cable, which is a totally consortium model. And those upgrades were completed in less than 1.5 months. And I've never seen that happen in any other cable throughout the world. The question that I wanted to pose was to I couldn't actually tell from your speech whether the branch ownership concept is also applicable in the Simba and Equiano models. And if that is actually the case, and if it were not possible maybe for any African operator who buys into that kind of model to actually operate on a monopoly basis, which is not actually true. I mean, possible maybe in South Africa because of the legislation that requires, all facilities which provide essential infrastructure facilities not to have open access. What would be the implication to that African operator who buys into this kind of infrastructure?
So let me give you my perspective, or at least my understanding of Equiano and Simba as far as branches are concerned. My understanding is that in Simba, it's a consortium cable and each party owns its own branch and they pay 100% of the capex and 100% of the O&M of that branch. In Equiano, I've heard that the carrier is supposed to pay 100% for the branch, although Google will own that branch. And my understanding is the deal is if you buy that branch, then the carrier gets to use capacity on the main cable for free. However, if at any point of time, if Google wants to use their branch, then Google can take that branch back without giving any money to the carrier. So it sounds unreasonable, but that's what I've heard.
Yeah, maybe I'll just clarify on the consortium versus private cable. I think WAX is actually quite a modern consortium. I don't believe that any upgrade took 6 weeks amongst the parties because the discussions and the decision-making process to trigger the upgrade usually takes months and months. And if you even look at just access, I mean, I'm just talking about in general terms, if you want to activate a 10 gig on WAX, you've got to put in your application and you're going to wait 4 to 6 weeks to even get the delivery of capacity that you already have that you want to get access to. So, you know, that's some consortiums are better than others, but I think by and large, it is true that just by its nature with 40 owners or however many owners there are, those things just take more time than a private system, which can make decisions immediately internally on new investments and upgrades or allowing access into the cable station. So it was a general statement, but I take your point. WAX is actually quite quick in the grand scheme of things of consortium cables.
Thanks, Mark Tink, SEACOM. I suppose mine is not a question really for the speakers, but more for the floor. In South Africa, particularly, I think we've traditionally been obsessed with the technical side of submarine cables, i.e., you know, what's the lowest latency I could get to Amsterdam so I can do my gaming? And I think that's been because we, as Byron was alluding to at the end of his talk, the majority of the investment, I think Sunil as well, needs to happen in the terrestrial, in country and so forth. But listening to their talks, listening to Sunil saying cables need to be a lot more open, listening to Byron saying that, look, if it were for free, it won't necessarily bring the cost down. What questions does that leave in your mind about, you know, where the future is for capacity into Africa, into South Africa, into Mozambique, into Tanzania, and so forth, vis-a-vis the extent to which the internet can grow for everybody at an affordable price across the continent.
My name's Alan Levine. My first question is for the chair. I believe that this topic is something to do with Google and Facebook doing undersea cables. And I was wondering if there's anybody here from Google or Facebook. Okay, so we're doing good. We don't need them, even though some people say that they're coming. It's very interesting to me that they want to help us address the rural area problem, which certainly sounds better than what's going on with our mobile networks, who have the obligation to address rural access and internet in rural areas at affordable rates. So if I can just say, I want to learn more about the maintenance of undersea cables, because my understanding is that although you might be able to buy an IRU for $1 million for a 10 gig circuit or something like that, the annual maintenance costs are way in excess of that $1 million. And I just wanted to learn a little bit more about what you do to maintain your undersea cables. I know that every so many kilometers you've got a box or something that's doing all the lighting and the relighting, and what actually goes into the costing. Not only how much does it cost to maintain these undersea cables, but what actually goes into it. If you can share some of the information that you have. Sure.
Yeah, so generally speaking in the industry, you buy an IRU, that's the upfront amount I was referring to, and the operations and maintenance charges are usually about 3% of that cost. So if you paid $1 million for an IRU, for example, you'd be paying $30,000 a year to cover the operations and maintenance. What does that go to? Generally speaking, cable systems, private companies or consortiums work with companies that provide a service. They usually get together and share ships, put spares on those ships, and make sure that the staff on those ships understand where the cables are, how to repair them. They have fiber splicing, spares of repeaters, you name it, right? So that's what that money goes to, because the annual charges to operate and maintain a cable system. Now that's assuming no breaks, okay? So an operator like SEACOM, for example, would take on the cost of those breaks. So if there's a cut due to a ship's anchor, that would have to get repaired, but your 3% O&M is going to stay the same as it is. So that's kind of a risk that submarine cable network operators, and they want to obviously avoid those kind of emergency repairs. So that's why we use all kinds of different technologies and systems to make sure that those subsea cables are on charts, that ships don't anchor nearby them, they don't hover over them, et cetera, because most of the cuts of subsea cables is due to external aggression by ships' anchors. And it's very hard to chase them down and get them to pay for it. But we've had a few cases where that has been the result. So some of the costs end up getting covered, but it's a risk that a submarine cable operator or a consortium takes on board, if that clarifies.
Thank you very much. Any more questions?